On July 4th, the UK will hold a general election, and the stock market will be eagerly waiting for the result and be watching the race closely. So what stocks should you look out for in this general election? Firstly, home builders. We believe both parties are likely to pledge to increase home building, with Labour pledging to build 1.5 million more homes and prioritising first-time buyers. Both parties could pledge to cut stamp duty to boost home purchases or offer subsidies for home builders to help them achieve house building targets. This could boost home building stocks. Stocks to watch out for include Taylor Wimpey, Vistry Group, Barratt Developments and Redrow Homes. Number 2, water utility companies. Labour has made many pledges regarding our water supply. This includes a more hands-on approach in light of scandals about sewage spills and unclean rivers, a stop to water utility bosses handing out bonuses to themselves and others, an increase in regulatory power over the water companies, and fines for illegal sewage dumping into rivers. This could be bad news for the stock prices of water companies in the run-up to this election. Severn Trent and United Utilities are key stocks to have your eye on in this industry. Number 3, healthcare companies. Both parties are expected to invest more in the NHS and social care, with Labour focusing more on cutting waiting lists and funding. Labour's current lead in the polls could boost the UK's healthcare sector stocks, with promises of more money for cutting-edge drugs to be made available on the NHS. GlaxoSmithKline, AstraZeneca and Smith & Nephew are all stocks to watch out for. Number 4, artificial intelligence. Some analysts think a Conservative win will mean lighter regulation for AI companies than Labour. Since the UK is set to become one of the big early adopters of AI, the outcome of this election could impact the big AI providers. Stocks to watch out for include Microsoft and Google. Here are some key points to note for this upcoming UK election. After the election announcement, the UK asset markets were quite calm, but in general you must be aware that expectations determine how volatile financial markets will be in the lead up to an election and after the result. For example, Labour currently lead by a wide margin. If this continues, then UK assets, including stocks and sterling, could remain calm during this election cycle. However, if the polls narrow, or if there are signs that there will be no clear winner from the July 4th vote, then political uncertainty could impact UK asset prices. Overall, there's an expectation that this will not be a particularly volatile election season, since Labour has a large majority. However, the prospect of a hung parliament after the vote would trigger the most volatility. The stock markets tend to do well in the first year after an election, especially if there is a change in leadership. Thus, a win for Labour could be good news for stocks. The market tends to welcome new prime ministers with fresh ideas. Subscribe to XTB to learn more about trading and investing.